The legendary investor Jeremy Grantham has recently predicted that US is in a stock super bubble and it's going to pop very soon. Now, I, for one, am not an expert when it comes to predicting super bubbles or stock market crashes, but I'm also noticing how the inflation is rising and how the prices of every item that you can think of is growing. According to Jeremy Grantham, who is the founder of GMO investment firm, there have been three other super bubbles in the past, including the 1929 and 2000 stock market crash, as well as the 2008 housing crash. And he believes that we are in the fourth super bubble in the past 100 years, which is coming to an end by a potential stock market crash. Which is why in this video, we're going to be focusing on 3 ways that I'm trying to prepare for a potential stock market crash, how I'm going to go about it, and how trying to get ready for it. At the end of the video, we'll also provide a quick update in our stock investment portfolio that we have with Questrade. It's our Smith Maneuver portfolio, trying to take advantage of good debt to build a larger portfolio. Let's get into it. All right, the very first way that we are preparing for a potential stock market crash is by knowing exactly what funds and ETFs we are investing in. It's so crucial not just to blindly invest and put your money into an ETF or ticker symbol that you've heard about, but rather do your research and understand what line of business they are in and what type of exposure you're getting in by putting your money in those type of funds. For me, I'm trying to diversify my investments by picking high quality exchange traded funds, split share funds, or high quality dividend stocks that allow me to earn some passive income on the side, while at the same time still maintaining my exposure to the stock market. We've made a ton of videos here on this channel talking about those high quality stocks or ETFs or split share funds. Be sure to check out those videos. I'll add the link in the description of the video. Many of the stocks that we are trying to get more exposure to are the ones that have a history of maintaining their dividend payments even during the toughest of times. For example, back in 2008, companies that maintained their dividends, and not only that, but also continue to extend and increase their dividends. These include some high quality dividend aristocrats or dividend king companies, and you want to definitely take advantage of those and consider investing in them if the timing is right, which is why considering to invest in undervalued value stocks would be another approach. You can take advantage of that, and we have made some videos on this channel to look into it. The second way that we are trying to approach this aspect of preparing for a potential stock market crash is by trying to set aside a larger portion of our net income when it comes to saving for an emergency funds. My wife and I currently have built about 3 months worth of our monthly costs into our emergency fund, but my goal is to bring this into a larger proportion and build almost closer to a 5 months savings in comparison to our approximately our monthly cost into our emergency fund. The way that we do it, we try to keep those cash into a high yield savings kind of account. Many of the savings accounts that are out there do not pay necessarily the highest interest. In many cases, those interest rates are actually even lower than that of the inflation rate. But at the same time, we feel that that's a good way for us to somehow diversify and put some money on the side. And these liquidity actually allows us to be ready and to take advantage of the times when the stock market has had a massive correction or potentially a larger crash. And those times we can repurpose those funds and money and try to really buy into high quality stocks or ETFs at the time. And of course, we feel better that we have some cash on the side, saved, of course, safely in a savings account. And the third way that we approach preparing for a stock market crash is indeed by budgeting. We make sure that we keep track of all of our expenses every single day for the entire month. At the end of the month, we look back into our expenses. We try to analyze, were we able to stick to the targets that we set already when it comes to our budgets. For example, we have a set budget for how much we want to spend in a month maximum on grocery shopping, how much we want to spend in terms of our discretionary spending for food, entertainment, restaurants, you name it. We have different categories and we try to keep track of them very diligently. We do use an app called Good Budget. It's a free app available on the app stores, whether it's Google, Android, or the Apple. So feel free to check that out. We love that app, and we think that it's actually quite been helpful for us. Those are the 3 key ways that we've tried to go about preparing for a stock market crash. We would love to hear from you. Let us know if you are pursuing any other ways to save and prepare for a stock market crash. Leave us a comment down below about that. As I promised, I want to also share with you the quick update in terms of our Smith Maneuver portfolio that we have with Questrade. So let's take a quick look into it and see where that account is at. All right, here is our stock investment portfolio that we have with Questrade. It's our Smith Maneuver portfolio. If you're not as familiar with Smith Maneuver is, check out some of our past videos where we talk about the Smith Maneuver in detail. But just for a quick summary, Smith Maneuver is a legal technique that investors in Canada can take advantage of. That if they have a principal residence with at least 20% down payment, they can have a appropriate type of mortgage. We call it the readvanceable mortgage, which allows them to tap into their equity of the home and borrow that money then to invest in income generating assets such as the stock market. That's what we've been doing. Currently, the total balance of our account is at $75,377. The stock market has not been the best in the past 1 or 2 months. That's why the account is currently at a negative 6.28% return. But this is the account for a larger kind of horizon. We are not worried about that. We want to gradually and steadily borrow to continue to invest and bring this account into a larger position. Let's take a look at our investments. Currently, we are only investing in VEQT, which is Vanguard All Equity ETF. It's all-in-one ETF offered by Vanguard. It allows you to invest through a diversified approach in the stock market, giving you exposure to multiple countries as well as various sectors in a very diversified manner. Currently, we have 2,225 shares of VEQT. And if I click on that, we're going to see how VEQT has performed over the different time spans. For example, in the past 1 month, VEQT is down by 4.67%. Past 5 days or past week, it's down by 1.23%. Last trading day, it was showing here. Last 3 months, it was showing to be down by 8.41%. Last 6 months, it's down by 7.26%. Last 1 year, it is only up by 3.26%. Definitely has gone down quite a bit from its high prices about end of December, where it hit that around that time frame. If you look at all time since the inception of the fund, it's up by 33%. Looking at specifically our holdings, I want to bring to your attention that our overall 2,225 shares are here with an average purchase price of $36.39. It is down by close to 7% or negative $5,664 at this time. VEQT does pay a dividend. It's paid on an annual basis, these distributions, and it's on average about 1.5%. Typically, that's the approximate distribution yield for this fund. Last time that they paid it, it was about 51 cents per share. Given that now we have much larger shares of VEQT, we anticipate that next year, around January of 2023, we should get a much larger distributions paid to us. And we are in kind of enrolled for a DRIP account. What we call is like a dividend reinvestment plan, which means all those distributions are then automatically reinvested to buy back more shares of VEQT to kind of propel and accelerate our growth of this account into a much larger position. Thank you so much, everyone, for watching this video. I hope you found it beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel for more videos about investing, whether it's investing in the stock market, ETFs, cryptocurrencies, real estate, as well as learning ways to reach financial freedom. Thank you, and we hope to see you next time.